So what is a chart of accounts anyway? I got into a conversation the other day with a guy. We will call him Sam. And we're here to protect the innocent. And Sam is a business owner just like you. He actually owns a family business. And we've been working together for a while, and we were working through one of the four core functions of business. Again, for those of you who are watching this show for the first time, you understand we talk about business owner and family business owner stuff, entrepreneurial stuff. People who have all of these same problems and not sure who to ask, this show is for you, and we're here to create a time wealthy advantage and get you in control of your calendar so you can live the life that you want. Welcome to the Time Wealthy Advantage. So he was asking these questions around the four core functions of business, which is lead generation, sales, operations, and accounting, right? So this one specifically is around accounting. And we got talking a little bit, and he's been working on finding someone, in this particular case, it's a VA, finding someone who is going to help him get his QuickBooks set up because he really didn't have an accounting system at all. And he took the approach to accounting of, well, I've got more money in my bank account this month than last month. I must be doing okay. Right? And taking that approach, I'm just letting you know, I took that approach to accounting for years, and I have an accounting degree, so I have no excuse. So it's okay that if you're feeling a little sheepish and you're like, I don't do any sort of bookkeeping until the very end of the year. Well, we're here to change that, because knowing your numbers is going to help you operate much more like a business, so you can be operating much more strategically and not having a business that runs you instead of you running, therefore you can run it. So let's get back to the chart of accounts. So the chart of accounts is obviously an accounting function. And when the bookkeeper was saying, in this particular case, it was a CPA, was helping him set up his chart of accounts, he's like, oh, absolutely, totally. We're going to set up the chart of accounts. We are going to chart all of the accounts. And I'm like, you don't have any idea what a chart of accounts is, right? He's like, shut up. I was like, okay, look, you're not expected to know, and it's okay. Just like there's just certain things that you're great at, and there's certain things that you just don't know yet. This one is one you don't know yet. So let's just walk through that. So that's what I want to do over the next few minutes. It's not hard. It's actually pretty easy, and it's really, really important in terms of setting it up right in the beginning. You'll also be adding some stuff along the way as different charges start coming in and different revenue streams start coming in. You'll actually need to add things to your chart of accounts, but you're also going to need to be referencing your chart of accounts when your bookkeeper or your accountant reaches out to you and needs to reconcile things. So we'll talk about all of that here in the next 10 minutes or so. So let me go ahead and share my screen first and foremost so you can actually see what it is that I'm looking at. Oh, that's not going to do. I'm going to have to do it much larger. Okay. So I'm going to do it like this. Take my out of there. Oops. There we go. And hold on a second here, guys. StreamYard is not my friend today. There we go. All right. So let me take that down so you guys can see more of this here. We're just going to basically create a chart of accounts pretty much out of scratch right now. So what I want you to think about when we're talking about a chart of accounts is I just want you to think of it as a simple list. It's just a list. It's a list of all the accounts that are going to show up on your financial statements. So you've got two main financial statements, right? Your two main financial statements are your balance sheet and your income statement. So when you start to understand that you've got your assets, your liabilities, and your equity in your balance sheet, and you've got your revenues, your expenses, and your net profit or net loss on your income statement, all of those individual line items that make up those individual accounts, that's pulled from the chart of accounts. So remember, the chart of accounts is just a list, and all we're doing is creating a list. So let me walk through what that might look like. So in this particular case, let's pretend that we're just talking about a very simple account, one of the first accounts you're probably going to have, and that would probably be a cash account of some sort. And that could be a checking account, savings account, but generally for most businesses are going to have a checking account so they can take money in and pay bills out and so forth, and have an operational account. But let's just keep it nice and simple for right now, okay? So you run down to a local bank, and your local bank says, okay, we're gonna open this account. You've got a business checking account. You're gonna deposit $10,000 into this business checking account. Fantastic. now you have a line item that belongs on your chart of accounts. So let's look at what that would look like. So here in the chart of accounts, what you would do is you're basically going to say, okay, so you're going to name this thing of something, right? So it might be biz, let's say for argument's sake, you might call it ABC Bank check. ABC, let's call it ABC checking, right? So it'll be ABC bank, but ABC checking, and then you might have the last 3 digits of the account number, 335, okay? So that would be a line item, right? That's basically one of the line items on your chart of accounts. And then over here, generally it's going to say there's going to be some sort of a classification. So classification. And the classification in this particular case would be obviously an asset, right? It would be an asset account, and it would be a cash account. All right. So that's generally how you would look at your. Now, I'm just breaking it down a little bit more simply, but it basically be obviously it's an asset, and it would also be a cash account. Now you might say, okay, we're going to also open a business savings account. So you might have a business savings, ABC savings, and you might put the last 3 digits, might be 001, right? Again, that would also be an asset, and that would also be a cash account. Let's say for argument's sake that you have a piece of property, right? That's also going to be owned under this business. Okay, so if you have a property that's owned under another business, that property would be owned under that chart of accounts, right? So every chart of accounts is going to be specific to each business. So in this particular case, let's say that you've got an asset, okay, and it's 123 Main Street. All right, so that's the name. That's the name of the chart of accounts, right? So and this might be asset, and then the classification might be property, okay, or you might put it under real estate. Okay, it can be called. You can really call this whatever you want. It doesn't really matter in terms of the classification, but it is specifically an asset. If you want to call it property, you could call it property, plant and equipment. You can call it, you can call it real estate. You can call lots of different things, right? So again, whether it is real estate, if you might have a vehicle, so you might own a 2010 HHR like I do, super fancy vehicle, right? And you might have it as an asset, and you have a vehicle, right? And you might have it under vehicles. That would be a classification. All right, so now we're pretty much picking up a bunch on the assets. So let's look at some other line items that you might have in your chart of accounts. Well, let's say that you have a mortgage on that Main Street property. Okay, so you might have, like again, let's say we got it from AB. Let's say it's a different bank this time. So you got DEF Mortgage, right? So DEF Bank Mortgage, and you might put semicolon 123 Main. Okay, and that would be a liability. Okay. And then you might have, in this particular case, this would be a long-term debt, right? So that'd be long-term debt. So this is what I'm talking about in terms of every individual line item would have, all you're doing at this point is just defining what would be on there. Now, right now, we're just talking about balance sheet items. Well, let's talk about maybe some income statement items. So you may have, let's pretend that you have a rental property business. Okay, so if this is a rental property business, some of the you'd want to define the types of revenues that you have coming in. So the types of revenues, let's say for argument's sake, might be rent revenue. That probably would be the main revenue that would come in, right? So that would obviously be a revenue account. Okay, and you could define that as that might be defined as rent revenue. Okay, and then you may have again, you might have other types of revenues that come in, which might be late fee revenue. Okay, so late fees. And late fee revenue would be defined as, again, a revenue. Oops. Doesn't want to work right now. There we go. And then you would call that late fee revenue. right? You see how this is working? Now, again, and you may have application fees, you may have other things like that are coming in, but again, just for the right now, you would want to break these things out. There's a kind of a there's a sometimes people would want to take and lump these things all together. And what I mean is, like, they'll say, okay, I've got, $1,000 coming in rent and $1,100. I'm sorry, and $100 worth of late fees. So they just call it $1,100 in revenue. My mantra is, when in doubt, break it out. I would like to know that I've got $100 in late fees and $1,000 in rent. Why is that? Because then I can start to track my effectiveness of actually collecting late fees. And because I wasn't tracking that early on, something that I didn't notice until way later was the fact that I was down like $30,000 in late fees because I just wasn't charging them. Once I started tracking the revenue separately, I was, you better believe I was a lot less lenient about late fees because of the massive amount of money that it was costing me not getting rent on time. And it was also training them about really bad behavior. So there's a whole other discussion around that. But I just want you to think about this in terms of being able to track the different line items, the different things that are relevant in your income statement and balance sheet. So right now we're on income statement items. So let's look at maybe some expenses. So in this particular case, we might have you might have property taxes, right? Property tax expense. Okay, so property taxes would be an expense item, right? And then you would call that property tax. You might also have interest. Right now, the interest is an expense that would go out due to your mortgage, right? So that might be mortgage interest, right? And let's say that you've also got other interest, that you just want to maybe create a line item for, and you might call that. Sorry, I know you can't see that. Give me a second. Let me move that up. You might call that credit card interest, right? And then you're going to create a separate line item for that. Okay, so all you're doing, card interest. Okay, so all you're doing is basically creating a number of accounts, basically a chart, basically a list of all the different accounts that you may encounter when you're in your normal operational mode of doing things. Okay, so creating these, you're going to do the best you can. And for the first month or two, generally the first couple of business cycles, generally what I would say is the first couple of cash conversion cycles. So in other words, if you're having your cash conversion cycle, if you are a rental operation, your cash conversion cycle is about once a month, right? Because you have expenses that generally go out, your utilities, your mortgage payments, your interest stuff like that all goes out. Most of those things get paid monthly, and you also receive your rents monthly. So if that's when your normal cash conversion cycle is. So it'll probably take a couple of these for you to start to figure out where your line items go. If you're not sure, it's okay. You can create them after you've started your operation, and we're going to talk about that here in a second. Let's say, for argument's sake, though, that your cash conversion cycle is later, like many farmers. They don't generally get cash rents until after harvest. So it could be, a once a year or twice a year cash conversion cycle. So whatever that is, you won't be able to know the full scope of everything until you actually go through a full cash conversion cycle. And sometimes there may be some things that you only pay for once a year. Like I have certain software that I only use I use throughout the year, but I only pay annually for the subscription. So that's why I'm saying there are things that maybe come up later on. So how do you use this on a daily operational thing? Well, what I have my accounting person do is my accounting person has a direct link to my calendar. In other words, I set up a calendar link. They can use that calendar link anytime they want. It basically trumps everything else out there. They can set up a 30-minute appointment anytime they want, and they are instructed to do so. Because when they are ready to do the reconciliation, I need to know that they have everything that they need. So they'll call me, hey, can you send this account, that, this bank account, or this credit card statement, or whatever. Sometimes I have to log in and do that. And then what they're doing is they're coming to me with basically line items that they don't know. They might have charges that are on there that are showing up that they have no idea where to put in the chart of accounts. They don't know what the charge is. They don't understand or maybe I received some money, and let's say I got a $30,000 sum of money that came in, and she has no clue where to put that, right? So they will come to you, and they need to come to you fairly often to ask you, hey, where did this $30,000 come from? This is why you want to do this on a very regular basis, i.e. monthly. Why? Because the longer this goes on, the longer your life, let's face it, life just gets busy. And the further out you get from those charges and those revenues, you're going to forget. So this is why it's really, really important, while it's still reasonably fresh in your mind, to make sure that this is a monthly meeting that your bookkeeper schedules directly with you. So when they get back in, and now we're having this conversation, and generally her name's Jennifer, and Jennifer, she lives in, actually I believe she lives in Atlanta. She lives in Atlanta, and she is now calling me and saying, hey, what about this particular line item? And I'm like, oh, that belongs. So now what am I doing? I'm referencing. I want to have the chart of accounts in front of me so I can reference where this stuff should go. I don't want to just be making stuff up on the fly, because what can happen is you'll end up creating duplicate accounts. Like, for example, this is a perfect example here is, let's say that you have property taxes. Okay. I might create another line item that's just called taxes, where I really mean property taxes. So now I've got two separate accounts. They both basically mean the same thing. Not basically, they are the same thing. I've just created two accounts. Now I've just made things more complicated than they really didn't need to be. So this is why it's important for you to have this chart of accounts pulled up in front of you so that duplicates aren't made. So that when they're saying, hey, where does this charge fit into the chart of accounts? And you look and you go, I don't really have anything that makes sense. Maybe we need to make a new line item, right? So something comes in, and let's say that I had an event, right? Let's say I had a tenant event that was, tenant appreciation, right? So now what I'm going to do is I'm going to come in here, and I'm going to create a line item for an expense called tenant appreciation, right? Or maybe I'll call it customer service, right? And that would be an expense, and that would be, I would say client appreciation, right? So that becomes anything that's under like customer service, or if I had to refund something, just for the sake of goodwill or whatever it is, that is a customer service expense, right? So that would, again, it might be a party, it might be like a 4th of July event or something along those lines. So again, do I want to make them up on the fly? No. You say, all right, we don't have a line item for that. Okay, I've checked the chart of accounts, and now with your bookkeeper or your CPA, whoever is doing your books with you, now they can go into this and create a new chart, create a new line item in the chart of accounts, and then put that charge in where it's appropriate. Or maybe you're getting a new revenue source, right? And maybe part of the revenue source was renting refrigerators and washers and dryers, right? So washers and dryers is a great example. Let's say that the unit that you were renting did not come with a washer and dryer, but you're willing to rent them for an extra $200 a month. So now you're renting this washer and dryer set for $200 a month, and that becomes appliance rental, which would be a new revenue line item. So this is what I'm saying, like, the chart of accounts is not, it's dynamic. It's not static. It's not set in stone. And some things will, generally, once you make an account though, and you put something into an account, generally it is going to be open and remain forever unless you move those numbers into a different account. But this is what I'm talking about from this perspective. So I hope you found this helpful. What I'm going to suggest to you is, if you would like to take this to another level where you want to learn more about your lead generation, your sales, your operations, and your accounting, I do have a Life and Business Accelerator, which right now is priced at $197. I'll put a link in there. That price is temporary. I'm just letting you know I'm building that course out much, much bigger, and it is a temporary price at $197. So if you would like it and get in now, you're going to get the benefits of the low price and all of the extra stuff that I'm going to put in there after the fact. And this helps build out this very stuff that I'm talking about in terms of lead generation, sales, operations, and accounting. It gets you the basics. And I'm even going to throw in a full strategy session with me to help make sure that you're getting all the areas that you actually want to be focusing on. So that way, when we talk, we can walk through the individual areas that you say, okay, let's focus on this, don't focus on that. And of course, you've got any questions, you can always reach out to me. All right, that is all I have. You have a great rest of your day. We'll see you next time.